Today's Talk About It Tuesday question is, I don't have a lot of money, but I want to start investing. I'm not sure if I should invest in real estate or stocks first. Which is a better place to start? Okay, I like this question, but I think the questioner is misunderstanding what investing is and how you profit from investing and mitigate your risk in investing. So when I think of investing, I'm thinking of a long-term strategy. And when I say long-term, I'm thinking a year and a day or longer. And if we're thinking a long-term strategy, then we have to consider that the economy will go up and the economy will go down over years. Inevitably, we will have cycles of growth, peak, decline, recession, and that cycle will repeat itself, not in very defined years, but inevitably it will happen. And so we have to understand that during different parts of the cycle, different asset classes will perform better or worse. It is very rare that all asset classes perform equally good or equally bad. So we want to be able to maximize our profit by being in multiple asset classes all the time, because you cannot truly predict when we're going to go through these economic changes, but you can predict that it will happen. So if you're in multiple asset classes, it doesn't matter if the economy is up, down, stagnant. It doesn't matter. You will always be in an asset class that is performing. So when we consider whether you should do real estate or get into stocks, I think you should do both. Now, the questioner said they don't have a lot of money. So you have to look at where your entry point is, not only about money, but also about skill level. So you have to look at your skill level, right? Your experience, your resources, how much money you do have to invest. And then you have to make a decision as to how you'll enter both of these asset classes. So most people, when they consider investing in the stock market, they want to buy individual stocks. Now, even though we have an asset class, we want to be diversified even in that asset class, which means we want a portfolio that has multiple companies in different industries and sectors, right? So, and I'll give you an example. During booming times, the tech sector usually does well, but when we have times of decline, tech sector doesn't do well, but consumer staples does well. So we always want to be in consumer staples and we want to be in tech. So when the cycle is up, we're profiting from the tech, and when the cycle is down, we're profiting from consumer staples, right? And then we have other things in between. So we'll have energy, we'll have, the financials, we'll have different industries that we want to be in and different companies even within that, which means we want to have a stock portfolio with a lot of different companies that we've qualified, not just because they're in there, but those companies themselves are doing well in that particular industry. So if you have a little bit of money, can you buy a lot of stocks? Yes, because you can buy fractional shares today, right? You can. But if you don't have the skill level to assess not just an industry, but how well a particular company has performed and is likely to perform moving forward based on a lot of different factors. If you don't have that skill level, then your entry probably shouldn't be in individual stocks trying to build your portfolio yourself. It is much easier to get into an index fund or a mutual fund, right? So those funds so a mutual fund is an actively managed fund by a fund manager who chooses a particular group of stocks that tries to beat what we call the benchmark, which is the S&P 500. An index fund invests in all 500 companies in the S&P 500. So if you have $25, you can buy into an index fund, right? And so it doesn't take a lot of money to own now the value of 500 stocks in terms of its percentage return. So you have to really examine how you want to enter. And I'm not saying you should never develop the skills. if you can enter into an index fund to be in the market, to take advantage of the market, and again, the S&P 500 is really the benchmark of how well the stock market is performing, while you develop the skills to begin to develop a separate portfolio of individual stocks, that's what you should do with your entry into the stock market. So let's look into entry into the real estate market. It is so hilarious to me that I get newcomers come to me and they want the most difficult projects that exist, right? They see a gut rehab that's not selling for a lot. So they think, okay, I'm going to get that because it's cheaper, and don't understand the level of skill it takes to take a building that has to be gut rehab. Like, you have to gut everything out, do the demolition, take stuff out. You have to have an architect, probably an engineer. You're going to have to hire a contractor that can do that type of work. You're going to have to manage the project. You're going to have to manage the funds. Then if you're going to keep it, then you have to rent it out and you have to manage the property. Like, those are skill sets that you have to develop over time. And there are other ways to enter into the real estate market. So one of the most basic fundamental ways, crowdfunding. There are crowdfunding platforms that allow you to invest into real estate projects, other people's projects, and you can build a portfolio of debt, right, where people owe you money and pay you interest because you've been part of funding their projects, but they have skills, right? So it's a lot lower barrier to entry. Some of them $250 to get in, $500 to get in, and you can build a portfolio that way. You can also do what we call a REIT, or real estate investment trust. Some of those only takes $25 to get in, and they pay dividends. So you have to find your entry point as you develop your skills for the more complex things that in the long run might pay you a more sizable amount of money. But I don't think it's a choice, and I don't think you should just stay in those two asset classes either. I think you should have a well-diversified portfolio. I don't care if you only have $100, split that $100 up. If you have $1,000, split that $1,000 up, because trying to chase the winner of the current day means you're probably chasing the loser when the economy changes. So hopefully that answers your question. I'd love to hear your investment strategies, what you would do. Would you choose one over the other? Would you try to choose both? How would you enter? But please like, share, subscribe, keep the questions coming, and I'll see you next Tuesday.